All right. December 4th. Let's talk about how many alignment channels happened today on the NQ side of things. And by alignment channel, I mean the 30-minute MACD, which represents momentum. That's what the MACD represents. The 30-minute MACD, the 5-minute MACD are going in the same direction and are aligned, not only in the slope lines, but also in the histogram bars and the movement of those. So let's see if we can find any alignment channels that happen today. And keep in mind, everybody can trade alignment channels, and you can trade them on not just like NQ and ES futures, but you can trade them on other stocks, stocks that are in play with high volume and a lot of liquidity and volume and things like that. Absolutely fine. So we start with the market open here, and we're going to look for the first occurrence of an alignment. So our 30-minute opens, we were actually kind of fluctuating at the beginning because we had a bunch of upward pressure, and we were, for the first minute or two, we were fluctuating, and right before the market opens as well. See right here, we have a big run up right before the market opens, and as soon as the market does open, we do get a big selling candle here. I'm going to switch these one moment here. So we get a big selling candle, and this corresponds with these two the 5-minute extended hours and the 5-minute regular hours. Notice how they're both aligning to the downside. We don't get confirmation until this happens here, until we've already had this sell-off. Now we have confirmation that we have a downward bias. And furthermore, the 30-minute extended hasn't really concluded yet. It hasn't finished this 30-minute segment. We look at the 30-minute regular hours, same picture almost, and then we look at the larger time frame, the 2-hour. What's going on in the 2-hour time frame? We've been selling off for a while. Heavy selling pressure. This gives us a little bit more context before we start taking trades. So now we have more confidence and context that we are playing to the downside, and we look for opportunities on the 2-minute chart, which is to say we need the MACD histogram bars to be going to the downside as well. And that doesn't really happen until kind of here. We get a little pop to the downside on the histogram bars, and it happens to be a power volume bar, a volume bar greater than the previous three. So had you entered on this trade right here, you would have entered at the close of the candle. You would have put your stop loss slightly above this candle and targeted a 1-to-1, which would have ended up winning right there. Let's see if there's another alignment channel that occurred. Now keep in mind, this was a weak setup because this wasn't really too strong. It was just a very small little bump breaking the upward movement. A little small little bump in the histogram, bringing it back down with that power volume. That was the entry confluence. But it's weak because look at how small that is. But those trades can sometimes pay off, and most of the time they do, 75% of the time, 80% of the time. And this one was no exception. With a 1-to-1, easily would have hit even more than a 1-to-1. But regardless, let's see where the next one occurs. So now we forget about the 2-minute, we go back to the 5. We're supposedly playing to the downside. That's what this is telling us. This is the move we just talked about right here. So we go past that move. That's in the past now. Now we're working back up. This is against our downward bias. This is not in alignment. We wait until the alignment begins again, which happens right here. Right here, do we get a break in the 5-minute? Now it's starting to align. We want it to be stronger than that, though, not just a little bit. We want it to be stronger. So here we've got nice continuation. We've got some downward pressure now, aligning with the 30-minute. So now we look and wait to see if we can find any clues on the 2-minute chart with a volume confluence and with the histogram bar movement. So we look for, can we find that alignment on the 2-minute chart? So here we are in this time. We go forward. We're still going kind of the wrong direction. But look what's happening. We're getting a lot of large red selling volume bars here, which is just indicators of, hey, you can enter this trade. Even though we're not getting that perfect alignment on the histogram bars, if we're getting a lot of signals from the volume, and if we're aligned, it's a higher risk trade because the histogram bars are not going with us yet. It's a higher risk trade, but it is valid. You can take these trades. These are worth it, and they pay off. So if you wanted to play it super safe, you would wait for this candle right here on the 2-minute chart. Why do I say that? We have now started in the red territory. The histogram bars are going with us on the 5-minute time frame, aligned with the 30. Right here, we get a volume bar which is greater than the previous 3, and it starts the movement on the histogram bars. You see it starting to move down. It ticks down right here. So this is the entry. We would enter at the close of the candle, which is right here. That's where the candle closes. We would put our stop loss above that candle, somewhere around here. And we would target a 1-to-1, which ends up hitting. So far the strategy has come into effect twice today. 2 wins, 2 occurrences. Now we go back to the 5. We see, okay, when is another opportunity aligned to the downside? It doesn't happen until much later. Look, all the way down here. See, it's starting to come down now, aligning with the 30-minute. We're now waiting for it to cross into the red or start touching red, and it doesn't until right here. But by the time this happens, we're getting no volume confluences. And if we do get a volume confluence, like this volume candle right here, look at this candle, previous volume bar greater than the previous 3. But look what's going on here. We're in green. We're not in red. We're not really going down either. It's just a little bump down. So there's a lot of warning signals to not take this trade. So we wait for the next opportunity, which is right here. See, it's starting to come down again, the 5-minute MACD histogram. Now we're touching red. We are now touching red. Now let's look at the 2-minute chart and see if we have any signals, any clues. Yeah, look at this. A massive power volume. It's touching red and increasing. We enter the trade at the close of the candle, which is right here. Target a 1-to-1 previously above the previous high or the entry candle high. Target a 1-to-1. That's also a win, a big win. So far the strategy has come into effect 3 times with 3 wins. Does it happen again? Look what happens here. Working up in the 5-minute. Now the 5-minute is starting to align to the downside right here. Look, it's touching red. Here, we're touching red. We're on the right side of the 2-minute. We get a power volume bar. We enter at the close of the candle, target a 1-to-1 above this candle. Also a win. That's 4 times today with 4 wins. We move forward. This would still be winning, by the way. If you had the stop loss in place, if you had runners on this trade, it would still be winning to capture what we're about to cover. Look at what's about to happen. So we're coming around here, we're coming here. Look at the 5-minute MACD. 5-minute MACD staying in the red, staying in the red. Look at our 2-minute MACD. Ugly, flat, indecisive, ugly. This is how you know we're in the middle of a liquidity zone, a zone of mutual interest. It's like a tug of war where the rope isn't really moving much. Okay, this is what this means. Look at this nice continuation and deceleration. And then we get here, and now look what happens. And look what starts to occur as we move forward. We get a massive, first of all, we get 3 red volume bars, and then we get a huge monumental volume bar. Okay? Right here. The 5-minute is aligned. The 30-minute is telling us to go to the downside, slightly aligned. The 2-hour is going strong to the downside, aligned. What do you think is going to happen after you see some volume bars like this? What do you think is about to occur next? It's obvious. A massive move happened. Huge profit. The strategy has come into effect 5 times today, 5 wins. This is one of those wins that pays your bills for a week or 2 weeks or a month. This is one of those wins that wipes out 3 losses, 4 losses, 10 losses. And we move forward, and we don't get another situation until right here. We're playing to the downside. Remember, playing to the downside. We get a little bit of a situation right here. We're starting to touch red right here. Do we get a nice you know, confluence here in the 2-minute. Well, we're touching red. We got a power volume bar here. So yes, we would enter. This is technically a early entry. Not the best, but it's some sort of entry. Why is it not the best? Why do I say that? Look at the MACD data. Look at this. Is this clean to you? Or is this kind of sketchy and ugly? Okay? The more ugly it is, the more sketchy it is, the less you want to care about the trade. The more you want to be willing to skip to the next one. Had we taken this trade, our entry would have been here. We would have put our stop loss above this candle that we entered on. We would have targeted a 1-to-1. This would have been a loss. So far, 5 wins, 1 loss on the day. And for the rest of the day, we don't get any more alignment because look at this. This is the first place you want to go. When does the 5-minute histogram bars align with our major oversight bias? 2-hour, the 30-minute, this is telling us where to go. Now our job is to go to the 5-minute and identify where is the MACD histogram momentum aligning with these higher time frames. That's called an alignment channel. It's called momentum stacking momentum on different time frames. Notice the last 15-20 minutes here we had a nice run up. This is giving some clues because the last 10 minutes of the day a bunch of algorithms turn on, and those algorithms, most of them, are specifically there to change average prices of long positions. So if a bank has a position in the S&P or in NASDAQ, by the end of the day, if the stock price has done X, Y, or Z, then their algorithms will come into effect, kick into effect, and either buy or sell to make their average price desirable for their goals. So that's why the last 10 minutes of the day is very powerful. It's because right when the last 10 minutes begins, a lot of algorithms turn on, and it tells you how people are positioning themselves, how people are changing their average price. And if we have a lot of buying, that means that there are, by and large, there's a lot of institutions that think that today was an opportunity to get in at a discount. They're expecting things to continue going up. That's one thing we can take from this. I hope you had a good day, and thank you for clicking on the video. I will see you in the next one. Take care now.